Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, August 13, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? She continues to power forward. What sell-off last week, she asks. We were looking for a low around the end of July, first week in August. Here's your low. The low was August 5th, just a week and a trading day ago. And here we are up approaching the 50-period moving average already and the gap we discussed last night. Speaking of last night, so let's jump into what we did discuss last night and see what developed and see where we are and what we did discuss today in the live room. I'll have you know. We were discussing the Fibonacci retracements. A 50% retracement is around 537.71. We had a breakdown candle high at 537. We had a trend line here and they blew through everything today. It was absolutely one of those gap and go type of situational days. So now they're approaching the 50-period moving average and the 618 retracement coming in at just over 544. I think we could expect to see that satisfied tomorrow, if not this week. However, this is regular way options expiration week. They are now in the zone we discussed. We had kind of a zone up here saying, hey, look, they're unlikely to blow too far through this zone without some kind of a pullback first. This was a good idea for a top in that A leg up, B leg pullback, or just B leg down. Either way, call it whatever you want. Either way, whether this is an A, B, C with another leg higher, or just an A, this is B, and then your C leg down. Either way, it doesn't matter. I'm looking for an interim / short-term top right here in this zone. Can they push higher? Of course they can. But this was the zone I was looking for. You're in an on-time type of situation. You're right in the zone. This is what we discussed. I'm staying fast with what we discussed. We'll leave a dashed line up there. That's the 618 retracement at 544.19. You have a gap here. The closing print on this candle is 543.01. Didn't close that today. Today's high is 542.28. So you get a little bit of a pop tomorrow morning. Fill that gap. Satisfy the 618 retracement. We'll see what happens from there. Can they keep going to the next price, the next place? Anything is possible. This is what we're discussing. This is what's on my radar screen. We'll see what happens going into Wednesday morning. It's regular way options expiration week. Are you going to get 2 days up, a back and forth situation on Wednesday, a day or two down? We don't really know. We'll see what happens Wednesday morning. This is what's on my mind from a daily chart perspective. When you look at the weekly chart, they got below but recaptured immediately the 20-period moving average while the trend is your friend. Therefore, there is nothing wrong with the weekly chart. This was another pullback in the midst of an uptrend. From a weekly chart perspective, that's it. Today, by the way, we had the 8:30 a.m. data release. It was the PPI data. My recollection is they generally release the CPI data first, followed by the PPI on Wednesday, but here we have it flipped. Either way, it doesn't make any difference. It's all alphabet soup anyway. But tomorrow we have the PPI data. What we discussed in the live room today was the fact that we've seen this book before. We've read this book. We've seen the movie where sometimes they'll pop it on the CPI followed by the PPI where they'll pull the rug out. We don't know whether that's going to happen. Anyway, it's flipped. So they had PPI today, they popped it. Maybe they pull the rug out on the CPI data. We don't know. Everything's hanging on the Fed as far as the market participants are concerned. We're just concerned with the numbers, the charts, the timing, and we'll leave the storyline up to the pundits and the talking heads. You want to talk redonkulous? Let's focus now on the lazy swing trader Automagical Algo system. She was a buyer at 197.59 in First Solar when, on the flush out last Monday, picked up a small bucket full of stocks. This was one of them. The second exit today on the board was 223.30. She finished around 230. Just an absolute lollapalooza of a rip-roaring rocket ride in First Solar. How you doing? This is just to the actual target, not where it is at close today. Any trader holding a trailer is just printing money. 25 points, 13% gain, 5 trading days. That was to 223.30. My goodness. And there's more. What about a new entry, Lazy Swing Trader Automagical Algo System? Don't buy it now. The buy was 94.51. How about being up $2 same day as the purchase? On the watch list, the alert comes out. The rest is history. Automagical Algo System, Bungie, BG, 94.51 this morning. Dead low. There's another one. Dead low, 56.88. Archer Daniel Midland. Easy for me to say. ADM. Again, don't buy it now. You're up almost $2. They're almost at first target. 56.88. Rocket Ride. Lazy Swing Trader. Automagical Algo System. Picked it up this morning at the dead low. How you doing? What about inside the numbers? Check out the commentary, pause the video, read the notes, go back to the chart, and double check the work. We had one short scalp trade this morning, and then it was basically a straight line up all day, not a trader's type of tape. We did have a short scalp. We did make some money. We went about our business, put a base hit in our pocket, and that was it. We do have some traders that are happy to ride the long side. We have some momentum traders in stocks, all of the above. But from an S&P perspective, it was a one scalp on the short side today, and that was pretty much it. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. We're looking at 537. We had another place at 538.35. That was a trend line. 5-minute chart, right of the vertical. There's your 537, the blue line. Your trend line is 538.25 today. The short, when you'll see in the notes, was 538.25 based on the fact that they did the 537 in the pre-market. The pre-market thieves did it this morning. See this over here? This was at 8:30 in the morning on the 8:30 a.m. PPI economic data release. They drove it right up there, hit it on the button, pulled back. That was the number. That was a breakdown candle high. That was the entrance to no man's land. That's a spot we look to all the time. All charts act and react the same way. That one was not magic. It was not formula driven. It was something that I've taught and teach in my course and every night and every day in the live room for years and years and years. See here at 9:07, the same spot in the pre-market thieves hit around 5:37 has the same importance after the bell rings. However, it is not, or I'm asking the question here in the rhetorical, I suppose, is it the same trade, meaning a short scalp with potential? That's what it was before they did the deed after the data release. So now I'm looking above. Above is the trend line at 538.35, and if above that we have 539.95 plus shipping and handling, which is basically a big fat round number of 540. This is a better short opportunity from where I sit if reached sooner than later, meaning 538.35 up to 540. And therein lies the short scalp this morning. No potential, just the base hit. That's all she gave us. We take what the market gives us and we move it along. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. Everything you need to know to be successful trading in the S&P during the trading day. We did not have any stocks on the move hit today. We'll take a look at the list. We had Home Depot, we had Lowe's, and we had CMG. Nothing hit my numbers, therefore nothing hit. They were all off the board. What's going on over in Camp IWM? Right into the 50-period moving average. Had a commensurate up day with the S&P, up about 1.6%. We are in an on-time type of situation. Different look on the chart. A little bit weaker, a little bit lag-ish from a visual perspective on where they sit on the chart in comparison to, compare and contrasting to the S&P. Next order of business on the bull case is to go get this gap over here, not that far above current price. We'll see what happens if they can start pushing above, closing candles above that gap, daily above that gap. Then you have that day's high, and you have a huge no man's land spot here where you get into the area of the 20-period moving average that is now curled over and is beginning to slope downward. What about the folks down at the transportation department up into the convergence? Once again, for the third or fourth or fifth time, the convergence of those moving averages. Buttigieg's crew. No real material change from yesterday. They were up 150 points, 1% at the end of the day. That's a nice up day, but no material change. Nothing happened. They're still residing. They're still hanging out in the middle of the triangle situation. Spiked it a couple of weeks ago, headed toward the bottom last week on the throw the baby out with the bathwater Monday flush out operation. And here we are right back smack in the middle. So at the end of the day, at the end of the week, nothing happened. So therefore, we don't have to belabor the thing. We can just simply repeat after me, move it along. About the Q people, look similar to the spiders. The momentum players are back. What sell off last week? It was an absolute buying opportunity. I'm sure you've all heard that on TV by now. Right into and closing above the 20-period moving average. Filled the gap. So from a technical perspective, from a visual perspective, on the daily chart, they are ahead of the spiders. There's relative strength in the Qs against the S&P. So you have the IWM with relative weakness from a chart perspective, daily chart to daily chart to daily chart. So if the spiders are in the middle, you got the Qs on the upside, more bullish. You got the IWM on the lagging side, more bearish, if you will. When you take into account the fib retracements, this isn't spot on to the penny. It's close enough. They're just now approaching the 50% retrace at 463, 464, that area. So that's where they're approaching tomorrow, puts things in perspective on why they are where they are on the chart. Of course, same on-time type of situation. XLF, no material change, hovering in between the 50 and 20 period moving average, trying to challenge this breakdown candle high, which is coinciding with the 20 period moving average, eating some time off the clock over the last few days, a little bit of back and forth, but no real material change, on-time type of situation. Remember, regular way options expiration week. Certainly the financials will be sensitive tomorrow to the CPI data release because the CPI data release will be part and parcel to Federal Reserve sensitivity, interest rate sensitivity, whether they're going to lower interest rates, how much and when, and all that stuff. So therefore, that's going to filter through and funnel down to the XLF and company. Write that down, put it on a sticky note. About a rip-roaring rocket ride and smash mouth, the Philadelphia Semiconductor Index, straight into the 20-period moving average, closed right on high of day, up 4% on the day, $9. What sell off last week? Here we are, but into an on-time type of situation, into this moving average area. Never feels like the market's going to turn around. However, you have to look at this objectively. A little bit higher, and they'll be into their 50% retracement from high to low from the last decline that culminated on Monday. So you put it in perspective, you say, well, it makes sense now. They sold off more. They surpassed the 382 today, heading to the 50. Every other market goes a little bit higher tomorrow. Maybe the smash mouth, or at least this week at some point, gets to their 50% retracement, which is a garden variety retracement. It's an on-time type of situation. There will be another on-time type of situation at the end of options expiration week. By the way, just put things in perspective. Put everything on the table. We're assembling the pieces to the puzzle. Once we have enough pieces and we have them in the right spots, we can certainly determine what the outcome, what the picture is leading to what outcome. At least the highest probability outcome for that matter. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I am David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of common sense market analysis.